Welcome back to the channel, traders and investors. Today, we're diving deep into a fascinating micro-cap stock that's caught our attention due to its incredibly high cost to borrow, BJDX Inc., ticker symbol BJDX. We'll break down exactly what makes BJDX a hard-to-borrow candidate, explore the mechanics of a potential short squeeze, and discuss the critical factors you need to watch. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, who is BJDX Inc.? BJDX operates in the healthcare and medical devices sector. With a market capitalization of just $1.01 million, it's definitely in the microcap realm. The company focuses on developing its Symphony technology platform, which includes an analyzer and single-use protein detection cartridges designed to provide rapid measurements of key diagnostic biomarkers found in blood. Looking at recent price action, BJDX has seen some downward pressure. Today's change is minus 1.87%. Over the last 5 days, it's done minus 8.70%. And looking back 30 days, the stock has declined minus 12.50%. What is cost to borrow and why it matters? Now, let's talk about the term cost to borrow, or CTB. This is the annualized fee that short sellers must pay to borrow shares of a stock before they sell them. Think of it like an interest rate. If you borrow money, you pay interest. If you borrow shares to short, you pay a borrow fee. These fees are expressed as an annualized percentage, and yes, they can often exceed 100% per year, sometimes by a lot. When the cost to borrow is extremely high, it signals one of two things: either there's incredibly high demand from short sellers betting against the company, or, more commonly, the supply of available shares to short is extremely scarce. Both scenarios can be significant for traders. Why the stock is hard to borrow right now. So, why is BJDX appearing on our hard to borrow screener? The numbers for BJDX are simply staggering. We're seeing an annualized cost to borrow fee of 745.4%. Highlight number, that's one of the highest numbers we track, indicating that it is exceptionally expensive to short BJDX right now. Our estimated float for BJDX is also quite small, at only 0.9 million shares. A small float means fewer shares are readily available for public trading, which naturally makes it harder and more expensive to borrow them. When we look at volume data, today's volume for BJDX is 313,000 shares. This is significantly below its 30-day average volume of over 9.5 million shares, resulting in a 0x relative volume score. This suggests current trading activity is very subdued. While lower volume can sometimes indicate a lack of interest, when combined with an astronomical cost to borrow, it can also mean that very few shares are available or willing to be sold, making it incredibly expensive for short sellers to find and maintain their positions. Our internal composite squeeze score, which combines factors like CTB, borrow supply, float size, and momentum, sits at 40.5 for BJDX, indicating a moderate but notable potential for squeeze conditions. Squeeze mechanics explained. For those new to the game, a short squeeze happens when a stock's price goes up significantly, forcing short sellers to buy back shares to limit their losses. This covering creates even more buying pressure, pushing the price higher in a rapid feedback loop. When a stock like BJDX has such a high cost to borrow and a small float, the conditions for squeeze can intensify. Short sellers paying 745.4% annualized are under immense pressure. If BJDX shares start to rise, those borrow fees will compound their losses, potentially forcing them to cover quickly. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have a very strong conviction that the stock will decline further, and they're willing to pay dearly to maintain their bearish bets. Dilution risk check. One of the biggest risks that can entirely negate a short squeeze thesis, even with high CTB, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically reduces the value of existing shares and, more importantly for squeeze, provides more liquidity and more shares that short sellers can use to cover their positions, thereby eliminating the scarcity. We've performed our checks for BJDX and found no recent dilutive SEC filings such as -1, -3, or 424B in the last 90 days. So, currently, this particular risk factor for BJDX appears low based on our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with BJDX? First, keep an eye on any sudden increases in buying volume. Given the low current volume, even a moderate spike could quickly impact the share price, especially with such a small float. Highlight volume while second, monitor any news or catalysts related to BJDX medical devices or a Symphony platform. Positive news could spark interest and force shorts to reevaluate. Third, continue to track the cost to borrow. If it climbs even higher, or if available shares to borrow shrink further though current availability is unknown, it could signal increasing pressure on short positions. BJDX Inc. or BJDX presents an intriguing case for those interested in hard-to-borrow stocks. With an astronomical 745.4% annualized cost to borrow and a tight float of just 0.9 million shares, the underlying mechanics for a short squeeze are certainly present. The current lack of recent dilution filings also removes one significant hurdle. However, remember that high cost to borrow is a double-edged sword and does not guarantee anything. Always conduct your own thorough due diligence. If you found this deep dive into BJDX helpful, please hit that like button, subscribe for more unique stock analyzers, and let us know your thoughts on BJDX in the comments below.